In this video, we're going to talk about Fubotv, where things are, what is the recent stock movement, and whether you should buy the shares. Fubo has been one of the more spectacular rise and fall stories of 2020 and of 2021. From around $10 in 2020, it rose to a high of more than $60 and even tried to get back to this peak in early 2021. But what happened afterwards has just been a series of disappointments and sell-offs. Essentially, the current stock price has been the result of a serious market correction. The initial reasons why the stock rose that much were the enormous subscribers increase during 2020 and the purchase of Victory to add another revenue stream on top of the subscription fees. At the time, the expectation from the market participants was that this very significant increase of subscriber numbers would be sustained, and not just a temporary blip that may disappear as soon as people go back to work, therefore canceling their streaming services. It's the same thing with the sports betting. At the time, the stock reacted positively to the news of diversification, not necessarily based on actual fundamentals, since the results will have to take time to appear. In a previous video, I mentioned that the stock needs to be basked in the magic of announcements and shielded from the reality for this trade to work. This period of time is now behind us, because the reality has definitely set in with one additional phenomenon. If you look at the stock chart, the recent price movement of Fubo is actually very similar to the evolution of a great number of startups and growth companies. So yes, there are fundamentals of the stock, which are now facing the reality a lot sooner than the shareholders have hoped for. But the overall market trend is still weighing a lot on the price of those startups such as Fubo, because a large quantity of market participants now consider that they paid too much in too short of a period of time. A large quantity of equity participations in those kinds of risky companies. Essentially, this sell-off that we have seen since the end of February 2021 is continuing, and we have to wait for some kind of fundamental change to the market attitude to see the fortune changing for stocks like Fubo. The reality that I see now is that on itself, Fubo has a lot of challenges ahead of it. The catalyst that this company has is mostly the acceleration of cord-cutting phenomenon. And to be honest, it's a little thin. The company now needs to demonstrate its capacity to keep its subscribers and to be able to increase its revenue to a comparable level to the expectations, meaning a growth of 80% on a year-to-year basis. Whether the company can really reach this kind of revenue, personally, I think it's possible, but maybe not probable. It's a huge increase that they've been projecting, and it's usually set for disappointment. With all that being said, I think that there is still one major argument to still look out for, simply because the price has gone down significantly. It's still this basic and mindless reason consisting of saying that the more the stock price falls, the more upside potential there is at the end for us. That doesn't mean that the share price will always come back up, but it's definitely a possibility. As a side position to sprinkle around in your portfolio, I think that it can be a great addition as soon as the price finds some kind of support. Careful, I don't see the support just yet. So definitely don't start buying like 80% of your allocation just yet. Thanks for watching. If you like my content, please like, comment, and subscribe to my channel.